Alright, for this video I want to go through a sample form W-7, which is an application for an IRS Individual Taxpayer ID Number, or ITIN for short. Now, the ITINs are issued to individuals who are neither a U.S. citizen or permanent resident, and this is issued just for U.S. federal tax purposes. So it's necessary to comply with federal tax filings or some type of information reporting and withholding. So in this scenario, we're going to have a non-resident that needs to file the W-7 to get an ITIN because he also is submitting a Form 1040-NR because he is an investor in a U.S. partnership that has some effectively connected income. So we've got the W-7 here, which we'll go through in its entirety. It's just one page. We've also got the 1040-NR that's going to be submitted, so we'll cover this as well. And we also have the Schedule K-1 package from the partnership, which shows the allocation of income and the taxes that were withheld. Okay, and then lastly, you've got just one slide here covering some background on the W-7 and the ITIN application, and then some more details on the fact pattern. So these ITIN applications can be submitted a number of ways. So you can submit them through an IRS approved acceptance agent or a certifying acceptance agent. They're really good resources to get this done for you and streamlined. You can also submit these applications in person. So if you visit an IRS Taxpayer Assistance Center, they can take care of that for you. Or you can complete the application, print it out, sign it, and mail it to the IRS office. And that's what we're going to do in this scenario. We're going to complete everything ourselves and then go ahead and mail it in. Now, generally, the W-7 always has to be submitted with a U.S. return. Now, under some circumstances, you can apply without submitting a return. There are some exceptions in the Form W-7 instructions, so you can have a look at the exception tables and see if that might apply to you. But in most cases, taxpayers find themselves where they have to submit this thing with a 1040 or a 1040-NR. Now, filing the 1040-NR in this scenario, we're going to be filing to try to get a refund claim from some taxes that were withheld on our partnership income, right? And this is reported to us on an 8805. So why does this happen? Well, when you're a non-resident and you're invested in U.S. assets that generate U.S. source FDAP income, those earnings are generally subject to a 30% withholding tax at source. So FDAP income is interest, dividends, rents, royalties, things like that. Now, if you're a non-resident and you're a partner in a partnership, and that partnership is generating effectively connected income, so this is trade or business income, that income is going to be subject to withholding taxes at source as well on your net allocable share of the ECI. Now, the withholding rates for this type of income is 37% if you're an individual, so a non-resident individual, and if the partner is a corporate entity, it's a 21% rate. Now, what's important here is this withholding tax has to be paid whether or not any cash is actually distributed to the non-resident partner. So it's just the allocation of the income that requires the payment of the tax. And so partnerships are going to do all this reporting on the Form 1065 partnership return, the K-1s that are issued to each person, and each foreign partner is going to get a Form 8805, which shows the withholding tax and the net, the allocation of that net effectively connected taxable income. Now, ideally, non-resident partners should have an ITIN before the 8805s are prepared by the partnership and filed with the IRS. Now, the reason why that's important is because if you file the 8805 without an ITIN attached to it, it makes it difficult for the non-resident to later file the 1040-NR to try to claim some of that withholding tax because the IRS can't easily track it within their system. They really need to have a U.S. taxpayer ID assigned to it. Otherwise, it makes it much more difficult to get these refunds back. And so in this scenario, what we have is Robert didn't apply for an ITIN well in advance, and so the partnership had to go ahead and file without the 8805. So let's look at the fact pattern here. We've got Robert, non-resident. He's a citizen and resident of the UK, but he now lives full-time in Belize. So Robert invested $10,000 cash as a limited partner into Partnership Name LLC, and this entity operates a local convenience store in Tampa. Now, the partnership is engaged in a U.S. trade or business, right, given its nexus to the U.S. And so that income is going to be effectively connected with that business. So it's going to have to withhold taxes on allocations of income to Robert as a non-resident partner. Now, Robert did not apply for an ITIN in advance, so the partnership has had to file his K-1 and 8805 without a valid ITIN. What they did was they input foreign U.S. as the placeholder on the tax ID field, which is okay, but again, it's better if you have the ITIN already, but in this case, we're filing for it after the fact. Now, for 2023, his allocable share of that income was $6,000, and so the required withholding tax was $2,220, which is 37% of the $6,000. So Robert receives that Scheduled K-1 package. It includes the K-3 and the 8805, and now he needs to do the W-7 and his Form 1040-NR. So we'll start with the W-7, get this completed, and then we'll look at the 1040-NR and how that's got to be prepped for Robert. So we've got at the top here, we're applying for a new ITIN, and we've checked box B. We are a non-resident alien filing a U.S. federal tax return. Now the name, Robert, middle name, non-resident. Line 1B, you can enter NA for not applicable if you've got the same name at birth. Obviously, if you have a different name at birth, go ahead and input that information. His mailing address and foreign address in Belize City, both of those are the same. We've got his birth information entered here, so date of birth, country, city born, and then gender. The other information, a country of citizenship, UK. He's got his UK tax ID number and the type of visa he has in the US. So he's got just a standard tourist B1, B2 visa. If you don't have a visa, that's fine. Just put not applicable, right? You don't have one. Now, identifying information, he's using his passport, not only as identification information, but also to prove his foreign status. So we've got his passport information in there. And line 6E, he's never received or applied for an ITIN before, so he's answered no. And so he can skip over 6F and go to 6G, which doesn't apply to him either, so he can enter not applicable under this scenario. Now, the passport, you can mail your passport to the IRS, and then they'll send it back to you. Or you can get a certified copy done at a U.S. embassy or a consulate, right? You can't go to just a regular notary. So Robert's completed the W-7, and then he's attached the certified copy of the passport, which he went to the U.S. Embassy to get. Now on to the tax return. So the 1040-NR, we start with his name, mailing address, and the ID number in the top right hand here is blank, right? Because he doesn't have an ITIN or a social security number, so he's just leaving that field blank. Now if we look at the K-1, let's have a look at the K-1. So this is the K-1 for the partnership. You can see here we've got Robert's information. Foreign U.S. was the placeholder because he doesn't have an ITIN yet. He's marked as a limited partner, a foreign partner. And then we see the capital account rec here, his $10,000 investment, $6,000 allocation of income, and then a $2,220 distribution. Now, the $2,220 distribution, the payment of the withholding tax by the partnership on the partner's behalf is a deemed distribution. So it's as if you distributed the partner the cash and then they paid it to the IRS. So it's recorded as a distribution to the partner. Now, sometimes there's timing differences where it might happen in a different year, but that's why that number matches the amount of withholding tax. So we've got the 2023 K-1. We've also got the K-3, which shows how this income is characterized. And so what we see, if we go down, let me scroll down here to parts, so part 10. So part 10 is where we list out the foreign partner's character and source of income. And you can see here that the ordinary business income is all being characterized by the partnership as ECI. So we have effectively connected income, it's U.S. source, so that's why we have these withholding issues. So the last item that's included with the K-1 package is this 8805. So the 8805 foreign partners information statement, we have Robert non-resident, the ID number that was attached when the forms are filed, right? So remember, ideally, You should have an ITIN here, right? We encourage partners to apply for that in advance. But if you don't, that's what gets sent along. So we got partnership name, EIN, address, and they are the withholding agent. Now in lines 9 and 10, we can see the income and tax. So partnerships, effectively connected taxable income, allocable for the year, $6,000. And then as an individual partner, we have $2,220 of tax. And they have a little note here, right? You can claim this amount as credit against your U.S. income tax on a 1040 NR. All right. So, and this, a copy of this is what's going to be included with his 1040 NR filing. So if we go back to the return, we need to enter the partnership K1 information. So that is done on Schedule E. So if we scroll down to Schedule E, we have partnership name. It's a partnership, the EIN for the entity. And then because he is a passive owner in this, he does not actively or materially participate in the business, it's being recorded as passive income of loss. So we have passive income from Schedule K1 of $6,000. And then we've also got this amount ultimately flows back up to Schedule 1. So we look at Schedule 1, we have the partnership income from line 5, right? And then this flows back up to page 1 of the 1040 NR. There's our $6,000. So he's recorded now the amount of net ECI that was allocated to him. Now in this return, he's also going to be able to claim the QBI deduction. So this is effectively connected income, which means it's eligible for QBI. So he's completed the form 8995 for the QBI deduction and reported that deduction on line 13A. So the net taxable income he has for the period is $4,800. Now, based on this amount of income and his filing status, the amount of tax when he looks at the tax rate tables is actually only $483. And so this is why non-resident partners really need to get the ITINs and file the tax return, because that 37% withholding rate that the partnership is required to use, that is the maximum rate. And so very often when you file a return, you find that the tax that you actually owe is much less. So we have the $483 of tax that he actually owes. We have the amount of payments made on his behalf, so federal income tax withheld from Form 8805. There's the $2,220 figure. So we've got $483 of actual tax that we're liable for, $2,220 of withholding, and so the refund is going to be $1,737. All right, so that's great, right? So Robert's getting some money back. Now, the other item he needs to complete is the Schedule OI in the Form 1040 NR. So he is a UK citizen. He's currently a resident of Belize for tax purposes. And he's answered no for most of these questions, right? He's never been a green card holder or a citizen or applied for it. His immigration status, he's not physically present in the U.S., so he has no U.S. immigration status. Item G, he's listed the dates that he was traveling in the U.S. for just holidays, so he was there July 8th through the 12th. And then on item H, he's given the number of days that he was physically present in the U.S., so 5 for 2023, 5 in 2022, and then 10 in 2021. Item I, he has not filed a return for any prior year, not filing for a trust, and he's not reporting comp of $250K or more. All right. And then item M, the last one there, he's not making any elections here. So 871D is a real property election to treat your rents as ECI. Not doing that here, right? Okay, so we've got the Schedule OI completed. Then let's see what else we got. So Schedule I is done. The 8995 is done. And then lastly, he's attaching that 8805 as evidence. So the partnership will send an 8805 to the IRS. They'll keep a copy. They'll give you a copy as the non-resident owner, and then they'll give you a copy C for the partner to attach to their federal return. So Robert's going to print all this off and include it with the filing so the IRS can look at this and verify, okay, we see that the partnership did submit an 8805 for $6K of ECTI, and there was $2,220 of withholding paid by the partnership. All right, so that covers it for this video. I hope that was helpful. Any questions, certainly feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.